Okay, so let's jump into down payment assistance because I get that a lot too. People just want to know their options as far as being first time home buyers. So tell me kind of what kind of programs are available and what are some of the pros and cons to using a down payment assistance program?
Yeah, so the one great thing about the company that I work for, which is Loan Depot, is that we have access to pretty much all of the down payment assistance programs across the country. So DPAs, I'm going to just use that as an acronym, down payment assistance. So DPAs, it could be based on the city, it could be based on the county, and it could be based on the state. So depending on one, what the specific need is it, do we need down payment assistance? Do we need closing cost assistance? Do we need both? There's just a wide range of different programs with different criteria. I will say in California, though, CalHFA is probably one of the more popular programs that's out there, that's available, and that has money, because there are some programs that they just run out of money depending on their fiscal year and how much they have available to give out to their clients. And it'll vary. CalHFA is pretty consistent, where they give you a $10,000 down payment assistance, and then you can go up to 3% as a closing cost credit.
Okay.
So that's a pretty good program. Now the criteria is a little different. We talked about minimum FICO score on the FHA and VA loans. For most of the DPAs, it's like a 660. So there has to, there's a little give and take, right? Gonna have to have a higher FICO score to get the money. Some programs, they're forgivable liens. So what that means is you have your first mortgage and then you have the down payment assistance as a second lien. It's like CalHFA, they actually have a third lien. So the second one is for the down payment, the third one is for the closing cost. And for certain programs, some of that money is forgivable, or it's forgivable over time, like a percentage is reduced after like 5 years, it's fully forgiven. Some programs like CalHFA is actually, you have to pay it off if you sell or refinance. So you have to pay those second and third liens. So I kind of just went over like some of the pros and cons without
Mhm.
saying there's pros and cons to it. But again, I think it always depends on the client
Mhm.
and their situation, because I get questions from clients that have a pretty good down payment, pretty good income, that I don't think it would be beneficial to go with the down payment assistance programs because of the cons side of it.
Yeah.
If we have someone that comes in with about 5 to 10,000, then I'm going to say, all right, this might be a good program, especially depending on the price point, right?
Yeah.
Living in California, especially in the Bay Area, the price points are just so much higher and they may need that additional assistance.
Sure.
Um, so yeah, I mean, it's popular. We do them, pretty much all of them. It just depends on the availability and the criteria of their program.
Now, if I'm using a down payment assistance program, because I know that from the real estate side, being able to close a transaction as quickly as possible is important. So, are these programs going to make the process longer in your experience?
So it's funny you touch on that, because I'm probably going to ask you a question in this scenario. So this is what I've found on the lender side from what I've been hearing from other agents in the industry. So because it's a really hot market right now, you have a lot of offers coming in on certain properties. You're not really seeing these properties sitting on the market for too long. And if there is, there's usually a specific reason, right? But once it hits the market, you're getting these multiple offers. So if you put your seller hat on, right, and you have two offers, same offer price, let's just go with 500,000. But one of the programs is just a straight conventional or FHA loan. And then you have the other offer that has a down payment assistance program on there.
Yeah.
What I'm hearing in the market is that that seller is going to go towards the more traditional with less guidelines, less of a timing, right? Closing, you mentioned that because it's still going through a secondary
Yes.
company or organization, there could be some delays that occur during that process. So again, there's pros and cons. Again, I'm always gonna encourage, if that's the way we have to go, is using a DPA. That's the way we're gonna have to go. And then I trust the agent that they're working with is going to be able to make that offer stand out and be strong so that it can compete with a standard 20% down conventional loan.
Sure.
So,
Sure.
but yeah, there could be some delays for sure because it's still a separate entity. Yes, we partner with them, but technically the money's coming from a separate entity that we have to coordinate the timing on everything. And yeah, there could be some delays.
Okay.
A DPA program, I would not tell my buyers to put in a 14-day close of escrow,
Okay.
if
Okay.
that makes sense. With their offer, I wouldn't do it. I would say 25 to 30 to 40, depending on the situation. So,
Okay. All right. Fair enough. Um, so with that being said, I wanted to switch over to the escrow process. So once I've gotten pre-approved, what are some things that I am not supposed to be doing in the midst of my pre-approval between pre-approval and close of escrow? What am I not
so
supposed to do?
if I'm not mistaken, on our pre-approval letters, I think we even notate that in kind of like the fine print, like please do not
Good.
pull your credit. Please do not open new accounts because that pre-approval is based on the information that we received um, prior to them repulling their credit, right? So if things change and they go buy a car, it can just really mess up the whole situation. Another thing, and I'm saying this because it just happened about 2 months ago. I had a client and they were buying a home and the closing date was maybe like 3 months out. So it was a little interesting because it wasn't a new construction, but she retired
Oh.
right as we were drawing loan docs. She
Oh.
said she retired about 8 weeks prior, right? Because right before we're drawing loan docs, we're going to verify if the client still works there, right? It's
Yeah.
usually just a verbal, just call, hey, does such and such still work there? Well, we got the letter, a written verification of employment the day we were going to draw docs saying she's retired,
Good.
and she didn't notify anybody. And I think that was probably the frustrating thing, is because I could have been prepared for it leading up to it. Or if you're letting me know you're going to retire, I can work around that.
Yeah.
Of course, I'm going to encourage not to, right? Because remember, we're basing your qualification on not only your current income, but your future income as well. But if you were planning to retire, hey, I applaud it, I encourage it, but you're going to have to wait until this transaction is over.
Mhm.
So that is the biggest no, no. Please don't quit your job. If you're transferring to another company or taking another job, I would always say just let me know ahead of time. So if you're inquiring, let me know ahead of time. I have a client right now today. They just went into contract on Monday. He's switching companies in like 2 weeks. So I'm aware of it.
Mhm.
I told him to get the offer letter and I
Mhm.
told him to let me know when he starts, because that way we can verify that he works at this new company.
Mhm.
But I think communication is key.
Mhm.
The client I was talking about that retired, she gave me no indication to even ask that question,
Sure.
because it's something that you kind of usually you would expect your clients to let you know,
Yeah.
because it's just a thing, right? You're buying a home and you know that we're collecting pay stubs and W-2s, but you know that you're not going to have that anymore. So you should communicate that at some point.
Wasn't even
We
like
were
a
able to get it done, but we had to like add the daughter. It got a little funky. It was challenging, but we got it through.
okay. All right.
So if you're going to pull credit, because I get this a lot too, I want to finance these appliances because they have 12 months interest free, right? Or furniture interest free. I'm typically going to discourage them from doing it. But again, depending on the client, right? If their ratios are pretty low, their FICO score is really high, I'm going to say, hey, get that deal, get the sale, get the 12 months interest free.
But if
I
they're like
encourage them to just,
marginal,
huh?
I said if their credit's like marginal, just even
Exactly. If
five.
you're at that 582 or
Yeah.
that 621, I'm gonna say, no, let's not do that. You're gonna have to just miss this sale because it could jeopardize everything. And it's happened before.
Yeah. I've seen
I
it too.
think the biggest thing, so what I would love to, when I'm partnering with realtors, is to just kind of let them know that too, so that we can be giving this information from two sides, right?
Sure.
Don't pull your credit. Don't go buy fancy things right now. Let's get the transaction closed first before we do any of these big major purchases. But sometimes, deals come up and I get it. So
Sure. Well, like you said, the key is communication. Let
Yeah.
us know anything that's related to your credit, anything that's related to your income.
Yep.
We need to know about it so we can work with
Assets too, right? If someone's expecting large deposit, right? Or gift funds, right? Because we're kind of talking about DPAs and things like that. Gift funds are kind of tricky where if grandma or excuse me, mom is depositing a large sum of money into their account, I'm going to encourage them to send it directly to escrow.
you.
The reason is I don't like my clients to have to do so much paperwork, and paper trail is king. You know, we have to make sure we can source where that $10,000 or $20,000 gift came from. So if you send it directly to escrow, we don't have to get information from the donor. We don't have to get other information to see the money leaving the donor's account, going into this account, the money going into the borrower's account, then going to title. It's just a lot of paperwork and a lot of extra stuff. But sometimes they already put the gift funds in it and we just have to source it. I also would say a big issue is transferring money. I have clients that have maybe 50 accounts and they're transferring money all through all
Yeah.
50 accounts on a monthly basis. So when I first do the pre-approval and I get their bank statements, I want to touch on this in a second. I'll come back to the pre-approval. Um, if they have multiple bank statements, I will ask them to not move a lot of money around. Because,
Mhm.
you know, some have like, oh, this is my house account, right? My mortgage account. I'm going to put all of the money. This is going towards the house. I applaud that, right? It's a good, I think it's a good habit. But if they can just keep it in their primary checking or keep it in their primary savings as best they can, I would say do that, because I'm using the funds from all of these accounts. So when you move them around, I have to source them and get other information from you.
Sure.
So again, I try not to like tell people what to do with their money, but I'm also going to encourage them like, what type of transaction do you want? Do you want to provide a lot of documents and a lot of explanations? Fine. If you're fine with it, great. Move the money around left and right all you want. If you want this to be an easy, seamless process, do minimal transfers, minimal large deposits. Yeah, those are the three big things. So once you're pre-approved, don't do much of anything else other than what we've already talked about, if that makes sense. If you tell me you have some money coming in, you tell me that there's a new job coming, great. Anything new or surprises, just let me know sooner than later.
Sure.
So you didn't ask this question, Erica, but I want to kind of jump in and kind of what I do for my clients when it comes to the pre-approval process. So obviously now I don't have a lot of one-on-one meetings with clients. As you can see, my office is, this is my kid's classroom.
Yes.
It
Very
was
nice.
just the best setup, right? So I'm not meeting with clients anymore. So a lot of the information I'm getting is over the phone, right? So I can do a verbal pre-approval like every other lender in the industry, right? How much do you make? How much do you have in the bank? I pull the credit and we're good. I send off the letter. What I like to do, and this is even while you're searching for a home, is I like to get all the documentation up front, income and assets up front.
Yeah.
I like to send that over to an underwriter immediately. So that way, while they're shopping for a home, it's being underwritten by an actual human person behind the scenes. So that way, the income, the credit, and the assets are verified.
Awesome.
So what does that do in a competitive market, right? Now I've taken this pre-approved client last Monday. I have a conditional approval this Monday.